Live?
No, we were.
Oh man,
I didn't want to. Hey, I wasn't gonna let you leave out, bro.
damn it, bro.
We're good.
We're live.
All right. Well, good morning. Good morning. Good morning. Well, how my football coach used to say.
What is
good
this?
morning.
What podcast is this? What number? Are we numbering these?
Yes, we're number 5.
How do you feel about being number 5?
Good.
Yeah.
Yeah.
What number
Is that
were you in
good?
football?
Number 19.
Okay,
I was
we
number
should have
19.
waited. we should have done all these based on what the guys.
Football numbers.
That's pretty cool.
High school football
High
numbers.
school football.
That would have been cool.
Yeah.
Damn, dude.
Still living the dream.
Hey, I
Good times,
I still think about
bro. Honestly, I still have dreams about it,
Yeah.
which is kind of crazy.
it never goes away.
It doesn't go away.
Feels like
I'll
yesterday.
dream about suiting up.
Yeah.
randomly.
Dude, it's wild, right?
It is.
You know, it's crazy that you say that because the other night I actually had a dream I was back in college.
Yeah.
And I was going through practice, and I woke up and I was like, "Fuck, it was a dream."
Yeah.
You know, I was like, "No!" Like I was like in practice, dude. But I mean, college was a different story. I threw that away.
Yeah. No big deal. That's a whole other conversation. We can talk about it later, bro. It's crazy how like those memories and that time period in our lives, man, has such a huge impact.
Absolutely, man. I the camaraderie and the connection that you have with the guys that you played ball with, even if it was junior high school.
Yeah.
You always refer to that. Oh yeah, I played ball with that guy.
Yeah, that's so crazy.
Oh, how do you know that guy? Oh, I played ball with him.
Yep.
You know, we played ball together. or
Even
whatever.
if you run into them now.
Yeah.
You know,
it's,
yeah.
it's still
Yeah.
it's a brotherhood.
And,
It
and,
is.
and you know, going back to maybe the high school days, there used to be a time where it's like, man, fuck that guy. You know, and like fuck that guy, he's a cocky motherfucker or whatever. And then you grow up and you're like, man, that was fucking stupid.
Yeah.
You know?
Yeah.
Like I recently saw a camarada I went to high school with, and we were on the same team and we just didn't like each other.
Yeah.
I don't know why. We just didn't like each other. And it's weird because his father-in-law is in the construction business. He builds a lot of fourplexes.
Okay.
And they were at the Sarsky Bowl. And when we saw each other, it's like all that beef had just dissipated.
Yeah.
You know what I mean? It was like it was all gone. There was no beef. There was nothing. It was like, hey, wait, go on now. Are you been? Oh shit, you're a father? Oh
Yeah.
shit, like he's a father.
Yeah.
You know, he's a full-on adult, but
Yeah.
it's crazy how time takes that away.
How old are you?
I'm 30.
Okay, so you're still going to be running into those people and having those same feelings 15 years from now,
Right.
Wow.
which is crazy.
How
And
old are
we'll
you?
probably
Wait.
keep doing it.
How old are you, Ronnie?
29. But I heard that it continues. Bro, why
Better
you
be
laugh?
the last time you asked me that.
You shouldn't laugh so hard. I feel slightly insulted, right? Should we kick this guy out or what?
I think so.
Damn, bro,
Yeah.
rubbing off, rubbing
not
it in our face how unuseful we are.
Yeah.
That's some
Yeah.
bullshit, man.
I don't know about you.
You know what? I
unuseful.
will race you right now in a 40-yard dash and whoop your ass. I promise.
Yeah, I would probably pull a fucking hamstring.
Yeah.
You get to this age, you're still good, but it's in spurts, right? You're
That's
good
right.
for like
I'm good for about 10
10
seconds.
yards. 10
Yeah.
yards. 10 to 20 yards, you're good. But
Yeah.
you try to run a lap.
Have you seen this?
I will
motherfucker,
challenge you,
Have
though.
you seen this
Yeah.
motherfucker?
Oh,
Ronnie?
yeah.
I'll challenge you, bro.
We played
Any day.
basketball.
We should go to jiu-jitsu.
No, I don't know about that. No. I'm not gonna put myself in a position of weakness.
Yeah. Exactly.
Where I feel very, very
I only
bad.
want to do stuff I'm good at.
Oh, man.
Anyway,
Yes.
Oh,
No,
bro, I'm so happy to have you here, man.
yeah, I'm happy to be here, man. I know it was kind of last minute.
No worries, bro.
You know, but it's always
I'm
great.
glad you stepped up to the challenge.
Yeah. And, whatever you guys want to talk about, whether it's
Anything?
life,
anything?
you know, all
Oh
that.
shit!
You know what, dude?
Wait, hold on. Let me call my attorney.
Let me back that up.
What can we talk about here?
Yeah, let me take a step back. No, but I like the way it started with football, man. We could talk about that.
Yeah,
all
dude.
day.
So what position did you play?
So I was a quarterback.
Oh, you were a quarterback.
Yeah.
Wow.
For Sherryland High School back in about a
2000.
couple years ago.
Hey, that Sherryland. Sherryland's always been a powerhouse.
They're okay.
They're okay.
Well, you played for Mission, right?
I played for Mission.
What position did you play, Ronnie?
I played receiver.
Receiver.
Yeah, Ronnie was a legend.
For real, Ronnie.
As a matter of fact, no.
That's why I run like the wind.
No. I have some football of my football picture upstairs. Can we bring it down?
Bring it
Just
in.
kind of like
Can we frame it here?
You know, that's what we should do. We should get everybody to put their football.
Bro, that's a
pictures
good
up.
idea.
Just
Hell yeah.
That's a good
There's a
idea.
lot of athletes as builders, bro.
Yeah, why is that? Statistically, I would say that there's probably a lot of athletes that are builders.
Yeah.
yeah.
I mean,
Something about the trade, something about the industry, something about the competition, maybe. I don't know.
Gilbert Espino.
Yeah.
Dude, that guy was a beast. Bro.
Really?
He was a beast. Like that guy, he played for Bears. And
Gilbert, if you're watching, put on your put on a highlight film on Facebook.
Hey,
you go, Gilbert.
respects, bro.
I want to see.
He was like the bus.
Yeah. Oh, he was a running back.
Yeah, he was a running back.
Damn, that's
he
pretty
played what you would call so they ran a slot T just like we did. And for his
What
school,
school?
he played for Bears. I played for Raiders.
Okay.
So I played halfback for my school, and he played fullback for his. But he was a year older than me. But that guy, like, dude, like
He was a
people
badass.
were afraid to tackle that guy.
Really?
Like that's because he was gonna hurt you.
Dude, we got to interview him.
I talked to him this morning.
Cool, that'd be
Yeah.
fun.
Yeah.
Oh, look, bring it in, bring it in.
No, man, I was just kidding, bro. Hey, my dad brought, look, full disclosure. Look at that. Damn.
Bring him back, bring him back. The hair, though.
Hey, in full disclosure, I didn't just have this in my office. My dad brought this to me the other day.
Dude,
My dad's proud of me.
look at the uniforms, bro.
man.
Look at that good-looking guy, man. Wow. That was like, what, 3-4 years ago? Crazy.
Damn, lady
Time
killer,
flies.
lady killer.
Yeah.
Damn.
Yep.
Goldilocks.
That's right, baby.
Look at that.
I ran so fast, man. No, I'm kidding. Anyway.
Hey,
We're not covering.
hey, Ronnie, put it right here, bro. Just stack it up right here.
Don't put it there because all I'll do is stare at it. And
Yeah. With dreamy eyes.
Fall in love.
Oh, shit. What are we talking about here? What a great morning.
Love it, John.
Oh, dude. See, this is the beautiful part of this, dude. It's just whatever. But, dude, football, man, it's amazing. You know, one thing that I really enjoyed, we recently had a meeting about the gallery. And one
Yesterday.
thing, yes, sir,
Great.
yesterday.
We got a bomb ass team for that, man.
Yeah, we have a great
Strong
team,
team.
and there's a lot of good ideas that are being thrown out there. But one thing that I really thought was cool, or I thought it was funny, is that one particular person in the group was worried about football, and it was Robert. Because we were like, man, we should do the gallery in November. No, we can't do that shit.
Playoffs. That's playoffs, man.
That's playoffs. And I was like, fuck yeah. I was like, this guy's thinking playoffs.
We
Like,
definitely got our priorities straight, Robert. You're absolutely right. We switched the fucking date.
You gotta get it straight. Man.
we're like, we're gonna go to October.
Yeah.
That's wild, bro.
I know it, man. No, but you know, going back to that camaraderie and stuff, man. I
Yeah.
still run into guys that played from other schools, and you know, at this point, you're just kind of like, yeah, you know, at least you know,
Yeah,
you kind of give them that
Like, we
that
whooped your
sideways
ass.
that sideways look, or now you whipped our ass. I won't look at them.
What was y'all's record?
Whenever I run into somebody that whooped I just go around, bro.
Yeah.
Even now.
No, we weren't that good back then.
What was your record?
Man, if I can remember, I mean, we were a little bit above 500 and stuff, but yeah, nothing to brag about.
No.
You know, we I think our coach was ahead of his time.
Okay.
At that time, Coach Pat Dowling, shout out, Mr.
Try
Pat Dowling.
Pat Dowling.
Try and
Dowling.
adjust your mic to where
Didn't
it's
Coach,
like-
Coach Dowling,
go.
didn't he used to coach at Mission? I think he,
so.
yeah, I think
Coach
so.
Dowling. And
Yeah, I think
Tommy
he-
Lee came over.
Yeah,
and
Tommy Lee. They used to
Shout out
coach.
to Coach
yeah.
Lee. Coach De La Fuente was there too. Coach De La Fuente. Shout out to all the coaches
Yeah.
out at the Chever.
Were they old when they're already there?
No, actually, Tommy was. Coach
No,
Lee was in his early 20s.
Oh,
Yeah,
wow.
dude, Tommy was young.
And then Coach Dowling, maybe late 20s.
Yeah. Oh,
wow.
Yeah, these guys. And so Coach Dowling, poor guy, had to deal with a short quarterback that couldn't see over the line. And so he had to put me in a shotgun like 10 yards back.
Oh, you ran shotgun?
Yeah, and we did like the you know,
fake give with
we
with
did all
everything?
the, you know, what you'd call the option
Right.
offense. And
That's cool.
ran no huddle and did
That's
all
cool.
that back in the day. But because he brought that from
Mission, yeah.
Yeah.
So interesting fact: Tommy Lee, played with Arnold. Arnold, my brother, who works with McKinney Glenn.
Is your brother older than you or younger?
Older.
Older?
Yeah, they're all older than me.
You're the baby?
Yeah.
You're
I'm the
baby?
youngest.
I'm the youngest.
Yeah, Arnold played with Tom Lee. Arnold with McKinney Glenn.
Wow.
Yeah, dude.
That's
Yeah.
cool.
Yeah.
Back when they went to they had Frank Hernandez and Nati Valdez and all those guys.
Would your brother play in football?
He was a DB,
Yeah.
a defensive back. They did I still remember this. They did a video. You know, back then it was MTV.
Sure.
MTV was kind of a big thing, right?
Oh wow.
And so they didn't do it on MTV, but it was a big thing, right? So like music videos were a big hit back in the 80s and early 90s. And so the news, I don't know if it was Channel 5 or Channel 4, one of those, did a video on the Mission Eagle defense, and it was with the track from Michael Jackson called "Bad," and
Nice.
yeah, and it was actually really good. Tommy Lee's in that video.
Awesome.
Yeah, I need to uncover that, dude. I'll send it to you.
I
It's
wonder if
really,
we could
it's
find shit
actually
like that.
really cool, bro.
That's pretty cool.
really cool.
Well, you know, back then, well,
Serby, if
I-
you're still up, sorry, Serby, if you're still upstairs, bring my laptop, man. I wanna look for that video.
Serby.
Yeah.
Well, the unfortunate part, and maybe the fortunate part, is that there weren't phones, and without disclosing how long ago it was, but you could probably tell that we don't have any videos on phones and stuff from back
No,
then.
hell no. It
How
was all
was-
VHS, bro.
VHS.
It was all VHS.
How was high school then, bro? Like I started like going through high school or going through the school system. Then how was it for you all? I mean, I'm sure when this shit started coming out. I mean,
I'm really not liking the way
I know.
He's like
my 8-year-old son says, Dad, in the olden times, did you
That's some
have
bullshit.
did you guys have phones? And no.
dude, it's because the other day I went to the bank and I went to go just take out some money or whatever to transfer money to another bank, but in the process I saw a kid. His mom walked through the door and he's like this, and the door fucking hits him. Boom. I was like, oh shit.
But did you laugh?
Low key, I did. But I was like, oh shit. The mom was like, opens the door for him. He didn't even flinch, bro. He just boom, took the hit. the mom opens the door for him. She's like, walk forward. And he's like, doesn't take his eyes off the pad. And she's like, sit here. And he goes and he sits down. Literally, he just walks, sits. And she's like, I'll be right back. And she just like goes and tells what she needed, and they told her to wait. But wait, I'm in line and I'm seeing this and I'm just like, what the fuck? Like it was like the kid was hypnotized, bro.
Right.
Yeah.
You know what I mean? And it was weird because the lady that ended up helping me, I made a comment and like something about like, man, like I was like, am I the only one that saw the kids hypnotized? And I told the lady that was helping me, and the lady knows me. I go to the same fucking
Yeah.
Wells Fargo,
Yeah.
whatever, right? And she was like, like it's the device?
Is it teléfono?
I was like, cool. But it was just weird, bro. And like, you see someone open the door, so I looked that way, and I see this door just knock the shit out of this kid, bro.
You know, you could look at it in in a positive way and say, man, that's a tough kid. You know what I mean?
He's gonna be a good football player.
That's a tough kid. He got hit, bro. He kept going. That's a valuable lesson in life.
Take it. Yeah.
Anyway,
Man, you have kids, you have to reward them now to get outside, and play and get off the tablet or the phone, and it's crazy generation.
you got how many kiddos you got?
two boys,
Two boys.
six and 8 years old.
That's a fun age.
Yeah, man.
You got them in sports?
I've got him in soccer, and my older one's in flag football.
Oh, okay,
And,
cool.
he loves it.
Yeah.
Poor kid, he's the most uncoordinated little thing, but he tries, man. And
He didn't get it from his dad.
And when they lose, he's like crying and he's upset. And he
shit, he's
cares.
passionate.
He's passionate.
That's
So-
cool.
So there's a little bit of fire in him.
That's good.
That's a good quality, man, to have
Yeah,
moving forward.
he wants to do it again. So I was kind of afraid at first that he wouldn't like it.
Yeah.
But he ended up liking
it.
that more than soccer, and he likes that because the camaraderie again. His buddies playing, and they're like they all rely on each other.
Right,
He's
right.
like he's the center, and so he gets to touch the ball. And
That's awesome,
run
bro.
and do all
He knows
that.
it's an important role.
I love watching him. Yeah.
That time frame, man, is just a fun age, bro. They're just having fun. It's a good time.
It's all about having fun and
Best advice that I could give to a dad, man, when you have them in little league sports like that is, dude, coach them.
yeah.
Seriously, like coach the team. It's so much fun.
Really?
Yeah, I regret. So I've got 2 kiddos. I got Cannon, who's 17, and Caden, who's 14. When they were in soccer, I didn't coach Cannon's team. I didn't know how. I didn't know what to do. Blah blah blah. But then, I started coaching my daughter's team, right? And my son was already out of soccer and all that, and so I didn't get a chance to coach him. But I did coach her, and I coached her for like 3 years, dude, and it was so much fun.
That's great, man.
Yeah, dude, highly recommend it, bro.
Wow.
You will not regret it.
You know, I thought about it because I see those poor coaches struggling, and you know, you want to get in there and intervene and be like, "No, you're doing it wrong," or "Do this way," or "Do that way," but you kind of take a step back and let them do their thing.
Yeah.
But no, you're right.
Dude, if you need help, let me know. No, I'm serious, dude. Especially if it's like football, let me know.
It's super rewarding, bro. I ended up coaching a little league team. I had a buddy of mine from high school that I played football with. He calls me. He's like, "Hey," he's like, "You down to coach a little league team with me?" And I was like, "No."
You should, bro.
And then he was like, come on. And I was like, all right, bro, I'll give it a try. So we show up and we go to this park in Far. And dude, it was a really cool experience. We ended up winning the little championship. And it was really cool because he was a defensive player in high school and I was an offensive player. And he was like, dude, just you take these guys for offense and I'll take these guys for defense, and you teach them your shit and I'll teach them my shit, and you run your whatever, you just do it. And we ended up raising money for the kids because they needed cleats. They didn't have cleats, and their parents didn't have money to buy them cleats and stuff. So we bought them cleats. We got them bags. We hooked them up, bro. Like our kids were little decked out little players. You know what I mean? But it was super cool. Like it was it was really rewarding in a weird way. You know, like I didn't expect from myself, or I didn't expect to like it that much. Because I mean, they weren't my kids. But they would look up to you like a fucking, like they were like,
oh yeah,
you know, they listen.
They were little, bro. They were like 6-7-year-olds. Like they were little, like they were babies, bro.
Yeah,
and you could tell who the bully was.
It's cool when you give them direction and they do it and they find success. It's like, man, that's so rewarding.
Yeah. I've got to hand it to the dads and that step up and coach, man. It's a big commitment, and I watch. You know, matter of fact,
they're not getting paid.
Yeah, they're not getting paid, and
they're doing it out of their time.
It's a big.
And you got to deal with little characters,
right?
What were you gonna say?
Well, works with you is he's a coach.
Anthony. Yes, bro.
Anthony's team is like the best one in the league.
They won first place.
Yeah. I see him there, and they're running drills. And he's got it down.
That's awesome.
He has no kids.
He's got it down.
He actually enjoys coaching, bro.
Oh man,
it's because it's crazy, dude. Like you see these little characters in them, you know?
Yeah, he's got them running routes and cones, and man, he does a great job.
Yeah, that's cool.
Yeah,
that's cool.
Anthony's.
I remember I would see these little kids running around, and I'd put them through the drills, and I'd put them like, okay, we're gonna do these cone drills, and you could see like the little athlete, like you'd be like, hey man, that kid's gonna be an athlete. Like this kid's got some good coordination on him.
Sign him up.
Sign him up.
That's crazy.
There's some that are amazing. There's these kids that are way more advanced than others, man. But then the other ones catch up eventually, right? Yeah.
Eventually, they all level out.
They do. They do. Yeah, once
to a certain extent.
Yeah, you know, and some get left behind.
Yeah,
I remember when I was little, I was kind of taller. I was the same height that I am now. I just stopped growing. I just grew sideways.
What are you, like 6'2"? What are you, 6'2" right now?
Yes, 6'2". Thank you.
6'2".
Thank you.
I think we're all 6'2".
After a tequila shit, I'm 6'5".
6'5". Thank you for that.
We've talked about age. We've talked about kids,
phones. Screw the phones.
I know. Man.
That's crazy.
Yeah. So being a quarterback, now here's the segue, right?
Right.
Being a quarterback, you obviously have to be a leader, right? And starting your own mortgage company requires leadership, right? And so, talk to us about Mr. Mortgage. When did you set that up? Why? What got you into the industry?
Right.
So on and so forth. Well, just so everybody knows, I know Sergio personally he's a good friend of mine. And stand up dude, man. So,
I was really looking forward to this.
Yeah.
One.
Were you?
Yeah, because you and I met you because these guys will be like, hey, like Dad will be like, let's go to lunch, you know, better be there. And well, that's how I met you, you know. But it's one of those things like, you know, you meet somebody, there's not much conversation in the beginning, and then after a while, we just get, you know, more and more conversation. I was looking forward to this one. I was like, man, I really want to know how, like, because you were telling me the other day when we were having lunch that you're like your own private company, right?
Yep. Yeah.
How does that work?
How does it work?
Yeah.
Well, let me start from the beginning. Right?
So let me have a shot.
Oh my goodness, yeah, already? Man, is it lunchtime yet? So, man,
we need to change the title of this podcast.
Yeah. So I went to school in Austin, and at that time, you leave the Valley. At that time, when you were in high school, your goal was to leave the Valley.
Yeah.
Right?
We'll get out of here.
You get out of here. There's nothing going on in the Valley. Everything else is going on up in San Antonio, Houston, North, right? And so that was my goal is to not come back. But in the early, without disclosing how old I am, in the 2000s, let's just say, I looked at the Valley and I said, hey, there's a good opportunity down there to the housing market at that time was hot, and so I was doing well, and so my brother and I and my friend Saul started up a little mortgage company. And what I mean by mortgage company is back then being a mortgage broker was common. Most of the mortgage companies that you would see around in the area were all independent mortgage brokers, and I'll explain what that means. But anybody had their firms, right? The mortgage companies, and this was before the 2008 crash, and 2008 came, everybody got wiped out.
I remember those times.
Right, crazy times. Yeah. Everybody got wiped out. All the mortgage brokers at that time got cut off because the lenders that they would use to send loans, shut down, consolidated, shut down, and so what the industry turned into at that time, instead of being a mortgage broker friendly industry, it became a mortgage company, a mortgage bank industry, where you would see these larger mortgage companies come in and open up branches, and that took over. There's guys out there that have done tremendous and success and with that model. And so at that time, I shut down a mortgage company and went into banking, right? And for about 12, 13 years, I was at a bank doing the same thing. I was running mortgage departments and helping banks grow their residential lending, construction, and mortgages. And but with that, kind of that fire still in me in the back, thinking, at some point I'll go back and jump back in to do it again. Hopefully, open up a company. And life kind of took over, and time passed, and the bank's comfortable. I could have, continued that path.
Banking hours, 9 to 3.
Would have been, and not to knock any bankers. It's a great living. Being in the banks gives you, respect, and people see you as a banker. They see you as someone that you can trust, and because you represent a bank.
Sure.
And so it could have been, and for those in the industry and are doing well in it, and great, power to you. I kind of felt like I always had that in the back of my mind to go back and open up a company again. And so, I had been looking at the industry for years, and the mortgage wholesale broker side started opening back up again. Brokers were starting to become a little bit more common. And so I saw the opportunity a couple of years ago and said, you know what, if I'm not going to do it now, I'll never do it.
Yeah.
And so my kids are still young. I could still take the risk. And so I thought about, I actually dreamt about Mr. Mortgage, that name.
Really?
When I was in banker. I had a weird dream about it and thought of it and thought, man, it's just kind of a simple kind of, whatever.
Let me put this picture in the public's mind. Was it a bow tie and you were naked? Just saying. It's called marketing, man. From now on, people are gonna remember that.
Yeah, right.
The bow tie. Yeah. Oh my God, they're gonna picture you naked with a bow tie.
No. I thought about the name first, and I didn't really.
All of a sudden, you're gonna get 1,000 likes, right? Hey, Serge. Anyway, my bad.
Yeah, no worries. No.
they're gonna crop his face on one of them, on one of the stripper bodies.
One of our friends will probably end up putting it on the chat,
like a Chippendale,
shortly.
like a Chippendale.
Actually, give it about 5 minutes. One of us will put it on there.
Chippendales, yes, please do. The Chippendale, make sure he's muscular.
Please,
make sure he's buff. So yeah, not to bore you guys, but yeah, I thought, I thought about the name. I didn't jump on it, didn't do anything with it. And then, the opportunity came up a couple of years ago and looked into it. It was available and secured it, opened it up. opened up the company. Started in a small little office at my buddy Jim and TJ's Wingate's offices over there on North 10th. Shout out to Encore and Wingate Law Firm.
Cool,
and
good guys over there.
They were friendly enough to say, hey, I've got an empty office here, come over. And so I started there and moved over to 1300 where they purchased that building, and I was there for a few months, and then while we built out our office there on Trenton, and so far so good. The name and all that came, and you start small. And when I started, the industry was hot, so it was an easy way to
upstart.
This is what, 2020?
2020?
2020.
21. I'm sorry, 21.
Yeah.
It was 21. Summer of 21.
Everybody's selling like crazy.
And then towards the end of 21, right? So when I started, it was hot, right? Rates were at 2%.
Refis, whatever.
Everything. So you couldn't. It's like fishing, and it's you're fishing in a barrel and it's full of fish, right? At that point, you could just cast and you catch something, right? And so the timing was good because it was friendly for you to start up a mortgage company at that time, right?
Right.
And as we got some volume going, and we were able to. I was able to hire an assistant, Tanya. Shout out to Tanya. And she joined, and then it was just Tanya and I for a good almost a year until finally decided, let's expand and bring in more people and more MLOs, more start growing the company. Now, as we all know, the industry's taken quite a bit of a turn. Mm-hmm. But before we get into that topic, you were asking what the difference is in starting up a mortgage company versus how does it happen? How does it
right? So yes, sir.
It's really not that complicated. You're as a mortgage broker, you're exactly that. You take in a client's application. You're able to shop it amongst a network of wholesale mortgage lenders. And what I mean by wholesale mortgage lenders is that these lenders are cut off from the public. They can't. The consumer cannot apply with them directly. They rely on the independent broker.
The broker has to make contact with these lenders for the consumer.
Correct. So we're the intermediaries, right?
Yes, sir.
The wholesale lender and the consumer, and we're still licensed. We're a licensed mortgage company, but we take in the applications and we're able to shop it, right? And so these wholesale lenders are able to provide wholesale rates and fees at a discounted price because they don't have that overhead, that corporate overhead of having branches and having to pay out, branch managers, regional manager, all that overhead that comes with that, and so they pass on that discounted pricing to us and the consumer. So we're their storefront, in other words, right?
Okay.
And so that's how that works. That's how that model works. It's just like going and shopping with an independent insurance agent that can shop your premiums versus going to like without naming any names, a corporate insurance company that can only offer that product.
Cool.
And so,
these wholesale mortgage companies, where do they get the money from?
That's a good question. I was wondering that.
They loan out billions, right?
Yeah. So are they dealing with banks, or are they private? Yeah. Are they private people
they're
that
not, they don't have deposits, so they're not a bank, right? Most of them are not. Mm-hmm. There's some larger banks that deal with wholesale, like Wells Fargo, and some of them do it. But most of these mortgage companies have, you would call it, a line of credit with a bank, and so they're able to lend out that money, and then originate the loans and then turn around and sell them. So many of them sell them to investors, sell them to Fannie Mae, Freddie Mac.
Fannie Mae, Freddie Mac, that's the biggest purchaser, right, of mortgage loans.
So
and they're government backed.
Correct. Well, they're supposed to be independent, but they're back in 2008. The government took over, and
so they borrow the money from a bank.
Correct. Yeah.
At a certain a certain interest rate for them.
Correct.
And then they turn around and lend that money to the consumer, maybe at a higher percentage. Mm-hmm. I'm assuming, so that they can go ahead and make up that whatever it is, the difference, right?
Yeah. That's essentially how all loans work. You secure money, whether it's from deposits, or if you're a bank, or if you're a lender, you secure it in a line of credit with another, and then you're able to lend it out for a higher margin, and so on and so forth.
Yeah.
The more layers, the higher the rate, the more the fees, right? But in this case, as a wholesale, you're able to cut out some of those fees and be able to offer a discounted.
The more middlemen, the more expensive.
More expensive. Yeah. Exactly.
And so with Mr. Mortgage, you guys are dealing directly with the wholesale lenders.
Correct.
So you can offer a better price, better fees.
Many times, yeah. I don't want to say we're
always, but
right, but we're able to at least let the clients know that, you know what, we take that shopping off of your back. You know, yes, you could always shop it around, and that's your right, and we encourage you to.
Yeah.
But we do that shopping for you through our network of
lenders. Yeah, I get a lot of questions from buyers when they run their credit for a mortgage loan. They get scared. They don't want to apply anywhere else, and so they feel kind of stuck. Is that the case, or what's the reality on that?
No, the reality is that you encourage consumers to go out and shop.
They don't get penalized, right, for shopping.
No, you have a window of opportunity to one company run your credit and then go without really affecting your.
It's like a 30-day window or something like that, right? Yeah.
And so you have that window of opportunity, right, to do that, and you're encouraged to. You're supposed to encourage people to shop, right? And so we do. I say, look, go shop it. You know, this is what we can do. Go shop it. I encourage you to, so that you could come back and realize that, you know what, you guys did, you know, you're offering a better rate or better terms, right? So I mean that's how it works, and folks that when I say, look, we shop it amongst lenders. Now we only run one credit score. It's not like go shopping for a car and then every lender runs your credit, you know. And
I had one do it 16 times one time when I was younger, bro. Like, really?
I wanted to be sure.
For a car? Yeah, for a car?
Yeah.
Oh wow. Yeah.
Dealership out of San Antonio.
Yeah, that'll ding your credit. Yeah, that'll ding your
slightly.
Slightly. Yeah. That's crazy. So yeah, I mean, the company's doing well. The rise in interest rates has helped us grow, believe it or not.
Yeah.
As a company, because, you know, when rates were at 2% when we started, and nobody was really shopping, you know, if you go to one mortgage company and they offer you a 2.9, well, you're gonna, as a consumer, you're gonna say, man, that's a great rate. Let me just take it. You know, no need for me to shop it around.
Right.
Even though
if you're trying to shop from a 2.9 to 2.8, it's like,
exactly.
Man, come on, man.
You're right. You're splitting hairs there. But now that you know, so we went from in the twos in early 21 to mid 21, we peaked at 7%, 7.25%. I think may have been in October, September that we peaked. You know, so imagine in 1 year you go from beginning of the year quoting in 2% range down up to 7%.
How long did that 2% last for?
Since COVID.
Since COVID.
So it was all started
like a two year period.
Yeah, it was about a 2-year period.
2020.
And so we saw that spike that freaked people out. It freaked everybody out. You know, we never in the history of them keeping track of rates had it spiked that quickly. And so, you know, we were able to weather that, and then you know, since then, it's gone up and down. It's been a roller coaster. So it went from you know, to 7%, above 7% in September, October. Then it dropped at the end of 22 to in the 5s, you know, during December, January, and then it spiked back up close to 7% in March last month. Oh yeah, we're in March. Yeah, March.
Okay.
And then it settled back down to close to 6 now, right? And so that's where we're at. But imagine that.
Yeah,
up and down.
So right when you go out there and spread the word and tell folks, you know, rates have dropped, they go and apply, and then they're back up, and you know, so it's hard to measure it. And react. I mean, we're always it's a moving target, so we're always monitoring rates, seeing what the market's doing, and because it's that volatile, I feel like I'm trading stock when I'm looking at rates now.
You're in Wall Street.
You're in Wall Street because you have to lock in those interest rates when people apply, and if you had quoted them a rate, you know, a week ago, 2 weeks ago, and they're back and they finally got a contract. Wait a minute, that rate changed.
Yeah, sorry.
So that's you always have to kind of quote it conservatively with, you know, to a little bit of a cushion, just so that when they come back, there's no surprises. But yeah, that's what we're having to deal with.
And all this is basically the government's trying to curtail inflation, right? And so they continue to move rates, and it's created some volatility in the market. But are things finally starting to settle down? What do you see here in the near future?
So, you know, we started the year with the anticipation that the Fed was going to continue to increase rates to battle inflation, right?
Right.
Inflation numbers were coming in beginning of the year. They still weren't as favorable as the Fed would like to see them because you have a strong economy. You still have good job numbers at that point. You still have growth. But then you have the consumer price index number, which measures the price of goods and services. That continues to rise.
It's going up immensely.
So it keeps going. Yeah. And so what do you do as a Fed? You have to increase rates to make it more expensive to borrow, more expensive, make money more expensive.
Yeah.
And so that's the way the formula works for them. They keep increasing rates to help battle inflation. But then you get, other factors coming in, like the failure of the banks, on the West Coast.
Right, the Silicon Bank.
Yeah,
was that a single bank or is it multiple banks?
Well, there's been a few.
Well,
really,
yeah.
been a few.
But what happened with that bank was that bank particularly, it started putting basically it put all its monetary system into what was the crypto. So when crypto went down, that it went down.
Yeah, a lot of crypto, a lot of bonds that they couldn't pay up on. But what I was reading about Silicon Valley Bank is that once the news was out, because you're in Silicon Valley, everybody communicates, everybody's on Twitter, everybody's on social media, everybody's, you're dealing with the high tech market over there. And so the word spread out and everybody at the same time
wanted to go get their money. Imagine that. And they weren't letting them, bro.
Yeah, they had to cut them off after a while because there was so much coming out so quickly. Millions of dollars every minute, boom, boom, boom. And so, there's a run on the bank, right? And so word spreads, and
is that something we need to worry about nationally, or more importantly,
that's
here? I definitely think so.
That's a conversation that's still being had. We don't know, but what would happen with rates because of that? The Fed looked at it and said, "Oh, are we doing too much?" Right. The question is, are we doing too much too quick? That's causing the market to react away, and it's affecting the banks now. And so we don't want to overkill.
Yeah.
And so that's part of the reason why we've seen rates kind of settle, right? And then the sentiment now is, okay, we're going to continue to look at inflation and continue to rise, but not as aggressively. We're still going to be careful because now banks are being affected. Is it a direct reflection of the Fed rising rates? Is that the reason why the bank failed? Maybe, right? But now it's become more of a global issue because there's banks in Europe that are also failing.
Really?
There's banks failing in France.
Are we worried about this?
No, not 2008 worried. I mean, if we would live through 2008, this is okay.
Should I go sell everything right
now? No, you're good. The thing about it is it's not real estate.
Yeah,
that's driving this, because back in 2000 it was real estate. I mean, it was our market.
There was nowhere to run.
There was loans. It was real estate. This has to do with more of where the bank is investing its money, non-real estate.
Bad investments on the bank's part,
not credit. Not bad credit. That's not what's causing this. Right?
What's up with this whole new thing that the Biden administration passed on how a person that is purchasing a house with good credit is going to have some sort of penalty? Sure. Not a penalty, but they're going to be paying like $40 or $60 more than a person with bad credit to subsidize for the person with bad credit. Is that true?
Right. In May 1st is when these new so Fannie Mae and Freddie Mac put out these what we call loan level pricing adjustments. It's a matrix that they put out, and they update it periodically, and they put them out. And what it is, it's you look at it as a chart, and it's tiered by credit score and by loan to value, right? Mm-hmm. How much down payment and what their credit score is. And it's like this matrix that you say. I wish I could show it to you, but and it's tiered. Anybody with a 620 to 640 or a 660 to 680 has these adjustments. And what I mean by adjustments is additional fees. So traditionally, the lower the down payment and the lower the credit score, the more expensive it is to get that loan. Right. That's traditionally.
Yeah.
And so what's happening now, and the higher the down payment, and the higher the credit score, well, the cheaper it is to get that, and the better the rate, right? So that interest rate is charged less to those that with higher credit and
more capital that can pay
higher down payment.
Yes.
So what's happening now is there's been more of a move to spread that cost amongst from the ones that have lower credit and lower down payment over to the ones with higher credit and higher down payment, right? And so for most, they won't see a difference. The ones that are that I've seen, that if you have a 620 to a 700 credit score and you're putting 5% down on a conventional, let's back up. These are only on conventional loans.
So it's not on FHA,
Not FHA,
loans?
not VA. No, this is just conventional loans.
Let's repeat that for the people.
So this is only for conventional loans. So Fannie Mae and Freddie Mac purchase conventional mortgage loans, not FHA, not.
So this new, I guess you can say, bill that's being passed by this administration, it's only going to affect the conventional loan and not the FHA loan.
Right. And so, like I was saying, folks that have 620 to 700 credit scores and lower down payments are actually going to see this more attractive versus going FHA, because those folks that are putting a minimum down payment and have that kind of credit score from 620 to 700, it's FHA. Why? Because it's less expensive up front, right? And so now the conventional mortgage, Freddie Mac and Fannie Mae said, okay, well, let's adjust our pricing for that bracket, for that clientele, so that we can make this product more attractive to them. Okay. Because there are advantages to going conventional versus FHA. Mortgage insurance drops off after a certain time for conventional versus FHA. It stays for the life of the loan, that kind of stuff. And so what happened is with this new model, these changes, it's more beneficial for those clients, because now they can compare the FHA and the conventional and say, okay, you know what, we may end up going conventional because it's more beneficial at that point. Now, folks that are affected negatively are those with higher credit scores above 740 that are putting 20% down. Theirs aren't as cheap anymore. Now, are they being penalized? Not that much. I mean, if you were being charged a half a point before, now it's 0.625 or 0.75. So it's a quarter of a point, maybe like that. Nothing crazy, nothing that'll break the bank. But I think the news is kind of focusing on that, and spinning this, at least from what I've seen, spinning this into like a negative thing.
Because when I had a negative view on it myself.
Right. No, I mean, look, in our demographics here, most of our borrowers are in that 620 to 700 credit score range. Most of them, about 90% of them. And so for them, and for at least our demographic, our market, it's a good thing, right? So it depends on how you see it. If we get a client with excellent credit and a large down payment, we'll look at it and see how it used to look and how it looks now, so that they could see what exactly it's costing them. And then if we can give them a discount, we'll give them a discount to make up for it. I mean, it's that flexible that we can work with it. But I wouldn't be too concerned if you have excellent credit and you're putting a large payment. You're going to be fine. I think you're going to be just fine. You're still going to get a good rate. You're still going to get charged the minimal amount of fees. If it was free before, now it's going to cost you 1/8 of a point or something. You know what I mean?
So right now, if we got a first time home buyer, right? I think they're the ones that need the most information because they've never been through this before. For a first time home buyer right now, what's the process? What should they expect? What interest rate? How much money down? If they want to get into a house, right? We're builders. We want to sell houses, and we want these people to know what they got to do to get into them.
Well, I mean, the first thing we do is when we talk to a first time home buyer is we go through the process and we say, okay, look, these are the minimum requirements. Let's look at where you're at. Let's run your credit. Let's look at your income. Let's look at what you have in your savings. And then we look at the options based on that, because there's some first time home buyer programs out there. There's down payment assistance programs out there. Some of them are income driven. So you have to meet a certain income requirement to be able to qualify for them. Some of them don't. The ones that don't have any type of income requirements are generally higher interest rate loans. So as a first-time home buyer, you can take advantage of some of these assistance programs, but it comes at a cost. Sometimes they're more expensive because the interest rates are higher. So if there is always a way that those borrowers can come in with the down payment without that assistance, whether it's through a gift or something, it's always the best case scenario in terms of the expense of that loan and how expensive it is in terms of rate and fees, because the down payment assistance programs are great. They're great. Don't get me wrong, but most of the time they do come at a cost. They're higher interest rates.
It's like they say, nothing is free.
Exactly right. Somebody has to pay for it, right?
Right.
And so yes, there are programs out there as far as interest rates. I mean, what drives interest rates are your credit score and your down payment. So the higher the credit score, like we just talked about, the more the down payment, the better the terms, the better the interest rate. So the good thing is about first time home buyers is that there's so many options out there for them. We from putting 0 down to putting 5% down going conventional, 3% down going conventional. There's so much opportunity for first time home buyers to get out there and take advantage of buying a home. The interest rates where they are now compared to where they were. I mean, we got spoiled. We got spoiled for
2% was unheard of.
Never.
It's free money. Yeah.
First time, and for many folks that were jumping into the market at that point, they thought that that's how it was. And for us that have been longer, I know this is.
You're lucky.
This is something that we won't see in our lifetime.
You had to take advantage of it.
Sure.
I mean, like you said, you're not going to. When are you going to see it again?
Right. And then yeah. So if you bought in that sweet time where rates dropped and prices were still low, inventory was high, man, you did good. You did good. Yeah. But as rates, when rates were low, inventory started coming down and prices started skyrocketing. So now you got a 2% loan, but you paid $10,000 over asking price. So did you really save, right?
What do you think about that?
At the end of the day, bro, it's always going to balance out, man. Right. That's the entire system I think that we currently live in.
So what we tell folks now is that are concerned about interest rates. Okay, well, but you're asking less than. I mean, you're placing an offer on that home for less than asking, and you're getting seller concessions now.
Are you seeing that a lot more now?
Yeah, some people are putting them offers for less than, unless it's a structured home, right? For less than asking.
For all you structured home buyers, we'll scratch that from the record.
No. But yeah, they're getting seller.
It's based on design and quality.
Exactly.
It's the vision.
So we're seeing folks. I mean, sellers being a little bit more flexible, and they're helping with seller concessions. That's the key right now. Seller concessions are really helping, especially first time home buyers. If we can get the sellers to help contribute, and what I mean by seller concessions is, the seller helps contribute
with the closing costs
to pay for closing costs, to even buy down the interest rate, to help them get a lower rate,
buy a couple points down,
so they can qualify, so they can sell their product. Move it.
What do you think about these price drops that we're seeing in the market? Do you think that people should hold firm a little longer? And I've talked to some people who are like, hey man, these price drops are insane, and they're part of the reason that we're having these issues. Yeah. I actually had a builder call me the other day, and he was telling me that he's been sitting on a house for about 7 months. And I had another one call me that he's been sitting on a house for about 4 months.
And here's the thing is that you can't just drop prices, because you still got to make a living. Exactly. You still got to make something on the house. I'm not going to take on a house for 6-7 months to make nothing.
And that's a lot of stress,
a lot of work, a lot of time to make no money.
He had go for.
So pricing from a material perspective, some things have gone down. For example, lumber. Yeah. Lumber has gone down, but I mean, my electrician went up.
Yeah.
Shout out to my electrician out there. You know who you are.
Plumber still went up. Going up.
The plumber still went up. HVAC guy, they went up considerably. Yeah. And so it's hard you can't just drop.
Yeah. And
if you got into a time period where it was like your materials were at the highest level, and you're still on that house, man, you're in a tough spot.
And that was their problem, bro. Mm-hmm. Their problem was that there was a particular builder where they're building that wanted to get the house off of his shoulders. Mm-hmm. So he just sold it like at cost. And by him doing
sometimes it happens, man.
It happens. And this guy just sold it at cost. And it's one, like, appraisals have a lot to do with the way that we sell our product, right? Mm-hmm. But you see, how do I say it? Like, there's sometimes people that don't see the bigger picture. We're all playing Monopoly in a sense, right? Mm-hmm. And that's what's both of their biggest thing was like, man, like these price drops are killing us, mm-hmm. And this is new construction, and mm-hmm. I have to make up for, he's like, these guys were like, we're just trying to get it off of us so that we can move forward to the next one. Mm-hmm. At this point,
a young builder, dude, like that'll put you out of business.
Yeah.
You know, and so you got to be real careful with that. That's why you got to join STBA, man, because we talk about this stuff, and at least you got information, right, to make better decisions. Exactly. We have lenders in our organization. We have everybody in the industry is we at least represent one of them in our organization, and that information is key to make the right decision, so you don't fall into that little.
You don't feel alone. You don't feel like you don't know what's going on. Right. I mean, you stay in tune with what's going on from a lending perspective, from a realtor perspective, from title companies perspective, from attorneys, builders, you name it. I mean, if you're part of this organization, you're in tune with what's going on.
Definitely.
It's a great tool and resource for many out there to come in and say, okay, well, what's going on? Because we all wonder that.
Yeah.
Even the ones that are in it. We wonder, well, what's going on? What do these guys think? Or let me get their opinion. And man, it's great. It's great what you guys are doing. And
the value, man, is in information.
Exactly.
It's huge, especially in a time that we live in where, man, it's so volatile.
Yeah,
I feel like change so quickly.
Exactly. I feel like things they just flipped.
Yep.
Like one day to the next. So my question to you was, how do you see these price drops and how do you keep it from people asking you, well, why were you selling this home at $1.4 million, but now you got it for $900,000? Why were you selling this million for $2 million, but now you got it for $1 million?
Yeah.
Like what's going? And you see these price drops, ridiculous price drop of $200,000. What do you mean $200,000? How does that happen?
It's a sign of our times, right?
And where are these buyers with $1 million homes?
Where are you getting your numbers, bro?
Yeah, no, it's a sign of our times, and because the whole goal with what's going on with interest rates is you something's got to give. The price of homes can't continue to go up with interest rates going up. Something's got to give. So we already know that interest rates gave because they're not low anymore.
So right? Do you think in a sense?
So we're in a rising interest rate market, and so. Now, what has to give are the prices at some point, right? Mm-hmm. But you're talking about a electrician charging you. Yeah, the materials may have settled down, right? The cost of materials, but now the labor,
labor's up because they got to be able to afford eggs.
Exactly. So now
fucking triple.
Gas,
and that's what I was getting at. I mean, the cost of goods, the cost of living has increased, so they've got to be able to charge. So that's the whole mess with inflation. That's what
I saw.
So where does it start? Where does it give? It starts with.
Everything's got to give eventually. It all has to balance out, or else it stops working.
But to the point to where you have to drop it 200. I mean, that's kind of drastic, right?
Yeah.
You start seeing it a little bit in like seller concessions are the first thing. Okay, well, you know what?
I'll give $10,000 to seller concessions.
And you're essentially dropping your price by giving seller concessions. That's what you're doing. But at the end of the day, that's what you see. And then okay, well, I'll drop the price and seller concessions. Okay. And then you start seeing
a total of $60,000 that you took off the house or something.
I mean,
Yeah.
How do you see prices, Ronnie? Have you seen them?
Those big numbers, I mean, I
that's
haven't
rare.
seen. Yeah. But
I'm gonna have to screenshot this when I see it on Facebook and send it to you guys.
Seen it,
4,000 or 5,000. You see it,
especially new construction. New construction still maintaining.
And if I'm budgeting a house right now, I'm budgeting based on what everything is right now. Right, and so lumber did go down, and so you do see a tick back on the price of the home, but not drastically. You can't.
No,
our margins are very small, man. By the time normally you sell a house, it's a 15-16% margin, right, of which about 8% of that is going to be overhead. Right, you got to pay people to run it, and you got to pay the bills, and you got to pay the electricity here at the office, blah 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 blah. And so our margin realistically is about 8%, right? And you're going to make mistakes along the way on that house, and there goes another 0.5%, 1%, and then you got to give seller concession. There goes another %, and then Jaime, my realtor, who you might know, I got to pay him to sell the house.
Another 4%, 6%.
What does he charge?
The other day he's like, hey. I charge a 6% if you want. I was like, I don't need you, bro.
Shout out to Jaime.
Shout out to Jaime.
His ears are burning.
Nah, he's a good realtor, man. He's one of the best I've ever
definitely.
And that's actually another thing that's changed now. It used to be realtors wouldn't even dare. I mean, builders wouldn't even dare look at realtors, and vice versa. Realtors wouldn't approach builders because
But we are.
But look at that.
And they became very important, bro.
They have.
They have.
I would say a percentage percentage wise, my homes, 60-70% are realtors. Yeah,
that's great.
Yeah,
that's great.
And another thing that people are doing is getting their license,
right?
And now they're making their construction company a full throttle real estate company. Mm-hmm. They're like, hey man, we'll sell your home and build you a new one.
Yeah.
You know, I mean,
and shout out to the realtors that join STBA. Like,
exactly.
Look at Jaime, for example. Jaime will tell me don't tell anybody to join because he's doing really.
There's plenty to go over.
Yeah, he's doing really well. But the reality is, man, he was the number one realtor in
the Valley
2022. Yeah, and I think kudos to his work ethic and all that. But his relationship with the builders was in my opinion, key. And we've talked about this.
Broke through.
Broke through. Yeah. So shout out to the realtors, man. We've got a lot of realtor-friendly builders. I think it's important to build those relationships between the two.
Absolutely.
It's definitely not an easy job.
Yeah. Mm-hmm. It's interesting that you mentioned that you see builders getting their real estate license. You see some realtors getting their mortgage licenses.
Yeah.
I have 4 on my team that I call my hybrids.
Yeah, that's cool though. I mean, more education in the industry.
Jacob and Sylvia Ann, they get to take advantage now because this year
you have Analicia, right?
Yep.
I went to school with her. Oh, you did? I actually got my license with her. I just never did anything with my mortgage because I'm so busy.
Right.
You know.
Right.
But I have my mortgage license, my realtor license, and I'm building and running the sales for Pop and
good.
And then. Well, Ronnie's got me here with him at STBA.
Got him working.
Too busy.
Yeah.
It used to be you can, as of this year, you can originate your loan and represent your buyer through a government loan through FHA. As of this year, before you couldn't. So now FHA opened that up for those hybrids, realtor, and so that they can represent a buyer, get paid commissions on that transaction, and then also originate the loan.
And then you got realtors becoming builders too. Yeah. You got realtors that are like, "Hey, I'm flipping homes and stuff." So
hey, man, more power to everybody that's trying to get ahead. Who's that?
Look who's
it's Mr. Lee.
Someone driving up in a Bentley. I think my Uber ride's here.
Where are we going?
Is that your Uber ride?
Yeah, it's my
Where
Uber.
Where are we going? You don't mind.
Yeah.
Just wait, Mr. Uber driver.
Yes,
we're not done yet.
We're not done yet. No, but and not to say anything, but Jaime's been instrumental to my company, my success,
of course.
He definitely inspired me to take that leap.
You're saying that because he's
now
here,
he's
bro.
coming right now. I got to say that. No, he's been.
Hey, get this mic going right here. Let's get him set.
We got a little cameo from.
I guess I think my time's done now. Jaime's gonna come and take over, right? Because
what's up, bro? I had no idea you were coming.
Oh shit! Well, why not? How's it going?
How's it going?
Good.
Mira, aquí vamos a comenzar bien.
hop on.
Hop on.
Throw on the headset.
All right, what's going on?
Put on the headset and see how sexy you sound.
Oh shit!
Yeah, we spent a ton of money on these headsets.
Yeah, man.
Thousands of pennies.
I feel like I'm in the Joe Rogan. You guys watch Joe Rogan?
Yeah,
I love it.
That's a great podcast.
Oh yeah,
it is.
I listened to the Elon Musk.
Yeah,
he's done a couple with him.
Yeah,
and man, those are some badass podcasts.
I know.
As a matter of fact, I think they drank on that podcast and they smoked weed.
Yeah.
So that's a great segue. Survey, can you bring? So we're gonna get high. Okay, we don't do that.
Well, thank you.
Hey man, welcome.
Well, thanks for sitting me in.
This is our podcast.
Oh, this is great setup.
Thank
What do you think? It's pretty cool.
It's pretty cool. Yeah. So what's going on?
Now we've been talking about.
We were talking about you, as a matter of fact.
Oh no!
Good. I hope it's been good.
Were your ears burning?
All terrible. It's all terrible. It was all true.
We want to borrow your car.
It was all true and terrible.
We're trying to borrow that car.
Anytime.
Good time. No, it's obviously good stuff about Jaime, man. He's my realtor. And we were just, as a matter of fact, it's interesting that you showed up because we were just talking about you.
Yeah.
And the success that you've had in STBA and the relationship that you've built with the builders, because we've been noticing, and Sergio had brought up that we've been noticing in the industry, there are more transactions with realtor involves involved realtor builder transactions that you've seen.
Yeah, that was unheard of a few years back. You wouldn't really see that relationship with builders and realtors, and I think you had a lot to do with breaking that barrier. Barrier. Yeah.
It's a no-brainer. You know, you want to be able to offer the service so that they're able to get the products out faster.
Yeah.
You know, because what we want as agents is for you guys as builders to keep moving the products.
Absolutely.
Because if you try to sell at the same time you're trying to build and manage your own company, there's no way you're going to be able to handle that. You know.
We talked about this a couple of years ago, maybe 2.5 years ago, when we were starting up STBA. The reality at that time, and I think it continues to be, is that there is not enough inventory, right, of homes. And so the inventory is going to need to be created. And who creates inventory in the housing industry? Builders. And so it's absolutely essential that you build relationship with builders, because we're the ones that are going to be providing the inventory for the foreseeable future, especially here in the Valley.
We just noticed that about a year ago when there was no inventory, when all
exactly.
the inventory
we
sold,
talked about
all
this.
the inventory sold, and we had to just go knock on doors and make sure that those builders believed in us.
What do you sell if there's no inventory?
Right.
Nah.
Exactly.
And you're a realtor at the end of the day, so you got to sell product. So kudos to you, man, for building a relationship with builders. I think I hope that it's done well for you. It's
been a life-changing experience to work with builders.
Yeah,
for me,
that's
personally.
Awesome.
Some builders, still don't believe that us as agents can really help them, get that product out. And the ones that do have seen a huge success. And we have the manpower. You have the manpower. We have the staff. So by builders giving us the opportunity to represent them, it's because they don't have to have the staff. We have the staff. We have the support staff at the office that's handling the transactions from beginning to end. They don't have to pay that manpower. So basically, paying us is not paying just me.
Right.
It's paying the service which comes with, the
sales is a job.
Yeah.
It is a full-time job.
The listing coordinator, director of operations, transaction coordinator, marketer. It's not just...
we just put it on MLS.
Right.
A ver si se vende. No, that's not the way it works.
How many people do you have working in your office?
I have 6.
6 people.
Support staff.
Staff. That's awesome.
Yeah. I personally know Jaime, and man, he gets to work at 5 a.m.
That's what I do.
And he doesn't leave until happy hour.
11 o'clock.
Just kidding. No, man. He puts in the time. You got to put in the time, and that time is value, right? And for me, as a company, I either pay a salesperson or I pay an individual like Jaime who has an entire team and staff who markets it for me, who takes pictures, who makes the call, negotiates the deal. Like, man, it's a job.
It turns into a brand, when you pay that attention to detail and the way you market your product.
Absolutely.
It turns into a brand. It's not just a house that you put a sign in.
Oh, no. I mean, you're definitely a brand.
A brand.
Like, you definitely have turned yourself into a brand.
That's the key. I think that many miss that. Oh, well, it's just a house. Sell it. It'll sell itself. Or you know what? I'm going to put up a sign and it'll sell itself. But now, I mean, as a company,
that's not true. It doesn't sell itself, right? Somebody's got to push it.
Yeah.
Somebody's got to make the call.
You got to answer your calls.
Yeah, you got to answer the phone.
You got to answer your calls. You got to respond to emails, respond to text messages. Some agents, I fall into that, hole sometimes that I'm so busy, but I always have to explain to my builders, to my clients, right now I'm not going to take a call because you sat me here, but I go back and I go back and call every single missed call that I have. Some people just, feel that, they don't need to.
That's the biggest thing, is answering the phone.
Yeah. I learned from a guy a long time ago, man, that lesson continues to be real for me. It's just another deal. Take the deal. Let's move on to the next deal.
Right.
And the more deals you have, the bigger the network. So we've got into situations where it's like, shit, it's not working out. The buyer doesn't want to budge. I can't. I've got my margin that I got to set. Okay, let's work the deal.
And we work it.
And we work it. And we close it, and we go to the next one.
Right.
And the next one. And the next one. And the next one. You just got to pile on the deals.
But you have to, agents as well as builders have to understand that it's a business.
Yeah.
You know, and because it's a business, you're not building this for 4 to 6 months and then not get paid.
Yeah.
You know, it's not fair. You know, I don't want that. You know, I want my builders to be profitable. I want the builders, and the same thing applies to our lenders. You know, hey, what are you going to do so that we can close this deal and it's sweet and we move on to the next one?
Your builders have to make money, because if you look at it like this, if you're thinking about it from a business perspective, right? Your company sells a product. We manufacture that product.
Right.
If you put us out of business, who manufactures your product?
Exactly.
Right.
Yeah.
So it's got to be a consistent win-win, and some deals are better than others.
Right.
But it's just another deal.
Right.
Close it. Move on. I'm on to next.
And as a lender, you play a big role in that too. Is in like Jaime said, you know, you give this, we give this. We all give to make the deal work.
Yeah, we did that recently, as a matter of fact, on a deal at Highland Oaks. We all gave a little.
Yeah.
Even furniture. You know what I mean? All right. Well, you know what? Throw in the couch. I want to. If that's what it's gonna say. Yeah. It was this deal.
Yeah.
You know,
Great.
Us three.
Great
That's awesome.
experience.
Yeah,
it was a
that's
great
awesome.
experience.
And then you not only do you fulfill a dream, but then you establish and you gain a friendship.
Yeah,
You know, and
Micah.
Then Micah,
Still good friend.
you know,
Shout out,
since,
Mike.
you know, Eugene sent Micah.
Yep.
You know, Eugene was a client that called me years ago when you were selling one of your houses. And right now, I'm actually selling their house because they're relocating. So it just becomes
The
a
house
domino
that I
effect.
built.
Yeah.
The house that you just
because
built.
he couldn't buy the one that I had.
Right.
Yeah.
So
And
it
it
just
becomes a domino effect.
Yeah.
You know, so if I wasn't transparent and if I wasn't working for them,
yeah.
I wouldn't be in this situation right now,
Yep.
where they referred and now I'm representing them again.
Yep.
Yeah.
You know, it would just be, you know, one transaction. And that's what, you know, I want the community to understand, you know, that it's we don't want the whole pie and eat it.
No.
Come on, guys. You know, we got to make sure that we all work together so that we can continue working.
Yep. If we didn't work together, maybe I don't build Gene's house. Maybe I don't sell my house to his friend Micah.
Yeah.
You know, it's just a kind of a snowball effect, and it all starts back in football. Teamwork, teamwork. You know what I mean?
That's
crazy.
Everybody's got to win.
Everybody's got to win, man.
You know? Cool shit, badass man. I'm happy you're here.
Well, thanks for having me to sit.
Yeah.
I'm going to take off.
You got things to do?
I got things to do. I'm going to drop off some documents and then I'll
Okay,
I'll
cool.
call you guys later.
Whatever you need, let me know.
All right.
Yeah,
Thanks for stopping by. I thought you were here to pick me up.
I thought you were my Uber.
I thought you were here to pick me up.
He calls for an Uber, right?
I'll see you
All
guys
right, bro. I'll call you later.
Okay.
Thank you, man. Okay, so I had a question that I wanted to ask you before when we were talking earlier. So I went to the builder show in Florida a year and a half ago, and they were talking about they at this builder show, which I highly recommend for any builder to go. As a matter of fact, anybody in the industry, you should go to these builder show. It's the IBS International Builder Show. They usually have it in 2 years in Florida, then they'll switch to Vegas and then back to Florida and so on and so forth. But I think it's going to stay in Vegas moving forward, is what I heard. Anyway, look it up. IBS, a big build. It's the biggest builder show in the country, and there's a lot of information to be had. And they have economists that talk. They have these workshops that they have these economists that come in and talk about what to expect moving forward. And one of those things was higher density residential, right? Which is we're going to get to a point where we may not be able to afford these bigger houses, and so we've got to cut back on the square footage or the land, and so that the cost of land is a little bit less, lesser than what it's been, so that the price point continues to be affordable for the masses, right? And so density residential. We recently started looking at this, and mid-rise condominiums, are starting to float around.
Right,
Dude, have you seen what they built there on Dub, right next to Lowe's?
I did see it
On the
yes,
corner? Who
yeah.
built that, bro?
Believe it, that was Alonso Cantu, if I'm
Man,
not mistaken.
Mr. Cantu.
Yeah, it's great, great location.
Have you
He's
seen
gonna-
that community he
Yeah,
built?
he's gonna do great.
It's
there.
beautiful, bro.
So you're going to see this more often, okay?
Right.
And as a matter of fact, Structures looking into doing the same thing. Condominium, mid-rise.
Mid-rise condominiums.
Yeah. So how, on the lending side,
Right.
Well, I've kind of talked to you about this before, so you can start kind of getting into your head.
Yeah.
But to secure a loan for a condominium, how easy is that? What pitfalls and what things do we need to look at?
So condo loans go into a different category traditionally, right? When you talk about traditional financing, conventional FHA, you're talking about a single family home where the land is included. Obviously, with a condo, it doesn't include the land, right? You're just basically buying the walls in. The rest of it's owned by the community, by the HOA.
By the community.
So it throws it into a different category in terms of financing. It's a condo loan now, right? Now, as a builder and developer, you have the opportunity to get your condo complex approved by Fannie Mae, so that if it's an approved Fannie Mae condominium complex, then you can then we can provide traditional conventional loan financing, and that's something that I can.
Oh, that's awesome! I didn't know that.
Right. So there's applications you take. There's a process to get it approved.
So what gives these particular spaces their value?
Well, you mean in terms of value,
appraisal value.
So that's the thing, is that appraisers are going to look at this as something new. There's not too many condo comps available in the valley, right?
Yeah.
Because there aren't too many condo.
Right.
Unless it's at the island, right? There's not too many down here, so you'll start that trend.
So you would be able to start that. Don't tell me, bro, because I'll get rid of sixplexes.
Obviously, there's going to be some obstacles, but I mean, if we stopped every time we saw an obstacle, it's like, no, dude, you got to figure out a way.
So there is a process of getting that condo approved through Fannie.
Cool.
And so
I didn't know that.
We'll look
That's
at
awesome.
that. Yeah, I'll look at that for you.
Yeah, because you're right.
That way anybody that comes in can offer that, and that makes it even more attractive.
It'd be like,
because now we can offer a 3-bedroom, right? For easier entry, right? A nice luxury condo at a cheaper entry,
at a regular
home.
Below 1,100 square foot low.
Sure.
A little 1,200 square foot, 2-bedroom, 2-bath with a little balcony. That 3-story or 2-story, like that.
Private low, whatever.
That would be really cool. Right. And so now you're making a product that's nice, mid to high end. Affordable.
Yeah, and being able to have that finance, because many times buying a condo, folks are discouraged because once they talk to a lender, they say, well, we can't do it. You can, but you got to put. I
actually have a buddy that just called me, and he's selling his condo at the island. He called me and he's like, hey, I'm going to sell my condo at the island. I'll give you some money, whatever, for a 4-plex, whatever. But this guy called me and he's selling his condo for $375. Yeah, he originally bought it for $200.
Right.
Wow.
So
he said it's just a little 2-bedroom, bro.
Yeah.
So part of those requirements for those condos are you're going to want to determine how much of those condos are going to be rents, or how many of them are going to be primary residences, because that has something to do with
Fannie Mae and Freddie Mac.
They want to make sure that most of these are going to be primary residences. They don't want to see that they're all rentals, or it's like a condotel, like a hotel, right? People go Airbnb them and back of it.
Right.
So that's something you want to look at.
That's
too.
so interesting, man.
Yeah.
It's interesting.
I'm really excited to get that going.
So
where are you going to be building this? Do you have it already?
I do have it's close to the courthouse in Edinburgh.
Nice.
Yeah, across the street from the golf course.
And that'll be perfect, bro, because you're already like there.
It's a good area, I think. But I'm not the only one talking about this stuff. There's some others. Yeah, there's some others.
And if we can secure that approval through Fannie, I mean, it opens things up for sure.
Huge.
For sure. Because otherwise you'd be not stuck, but you'd basically be offering it to investors that are buying and to rent out.
Right. Yes, sir.
Because the product for somebody to buy it as their primary won't really be available for them, right?
Yeah.
Because of that.
Yeah, and obviously there's more buyers in that that need homes, and then there is investors.
Because you're doing it based on the conference that you went to. You're doing it because you're seeing that people's affordability and all that for their primary residence, and that's really the goal that you're trying to accomplish, is to provide affordable, basically affordable housing, not in that sense, but affordable in a way to people looking to buy it as a primary.
I have a question. Can you purchase a condo with an FHA loan?
No. I mean, there's no, not traditionally, no.
Not traditional.
It will have to be a conventional loan regardless.
Yeah. I mean, but if Fannie approves it.
But if Fannie approves it, then we're talking about what, 5%?
5%.
5%.
3% first time home buyer, 5%.
Yeah.
Your second time home buyer.
Yeah.
You're saying a little space for $100K?
Yeah.
Wow.
I mean, well,
I'm just throwing a number.
But realistically, right now,
because it's
a
a
starter
home.
home is $250.
Yeah, it's a home. It's a home. I was just throwing a number, but it's a home.
And so if we can provide a more upscale product in that same price range, right? I think there's an opportunity.
Yeah.
Right. And so let's look at that, man.
Yeah.
Because we're ready, bro.
That's exciting.
Yeah. It's exciting.
And you're looking at it now before you start breaking ground, and that way you can look at what the requirements are. And,
pre-sell based on everything. All the moving parts. And so
good deal. Man.
Question.
Sure.
Let's just talk fourplexes here.
Mm-hmm.
In a sense, would you be able to sell?
Yes.
Those particular apartments as condos?
You can. You just got to create a condo regime. I did it back in 2008.
Right.
It was a similar situation where industry tanked and people weren't going to be able to afford homes, and we built a couple fourplexes there on Jackson, and we created a condo regime and sold them individually for 80 grand a pop.
Wow!
And they sold, and so we didn't stay stuck with any inventory because we got creative and unloaded them.
That's great. Yeah. I mean, if you structure it that way, right. No pun intended.
So,
You got my brain moving. That's why.
Move it, baby.
Yeah.
Move it. We got to think outside the box, man. Not everything is just cookie cutter, right? Like build a house, sell it, build a house. I mean, we gotta adapt to the environment and to the economy. And if you want to live in the middle of McAllen, well, that's hard.
It's
Where
hard.
do you even
it's
find
expensive.
a piece of land, right?
Yeah.
And how much are you going to pay for it if you do?
Yeah.
So we, developers got to get creative and provide product that people want.
Yeah.
In places that they want to live.
And sometimes people, all they want to say is like, this is mine. Like, this is mine. Whatever it is, this is mine.
At least it's theirs, right?
At least it's theirs. And one day,
home ownership is still the American dream, bro, and it's going to be for a long time. That is something that's engraved in our in our psyche, man. And so
it is, and you hear some folks out there saying, "Oh, we know rent, don't buy," and you always want to have that home ownership, like you said, is the biggest investment that most people will make in their lifetimes,
yes,
and so just because interest rates are high or whatever it is, it shouldn't discourage you from buying it. I mean, you can always refinance down the road. Don't lose the opportunity to secure your
absolutely.
home.
Yeah. It is still
build equity.
It is still a better investment.
It still is.
To buy
the risk levels are low because it's not volatile to whatever somebody says, and the stock market plummets because somebody quits or somebody gets fired. And real estate is real estate.
Real estate is real estate. It's if you look at it in the long run, it always goes up.
Yep.
Ronnie,
100%.
You said something where in building like a smaller product, but like the cost of land. Mm-hmm. Do you see maybe the cost of land coming down a bit, or I mean, because you could build a smaller product, but you still see these lots like at 45, 60, depending where they're at.
We rarely see the cost of land coming
ever
down
come
unless
down
there's
again.
a crash.
Yeah, because there's not going to be like 25,000.
If there's a crash, sure, you can buy up stuff cheap, right? People trying to unload, but unless there's a crash, cost of land is where it is.
Yeah,
and we always say, it's still expensive today. We should have bought 5 years. You always should have bought 5 years.
You're going to say that 5 years from
You're going to say 5 years.
And 5 years from then. And 5 years from then.
Exactly.
And you can try and build a smaller product, but you're going to have to sell at a price because you're going to have to make up for the lot or whatever it is that you're using.
Yeah. So cost and price, at least to me, in my opinion, it rose quickly. I mean, we went in a 2-year span. We saw a price increase of 20-30% from before, maybe more, right? And so I think what it'll do is level off for a while.
It'll plateau,
but it won't come down.
I
think your prices are your prices, and we have to live with it, and then it'll continue to rise, down the road. Yeah.
If we look at a graph, I think historically real estate looks like this. It'll go up. Right, there'll be a spike all of a sudden for whatever factors there are in the environment, and then it plateaus.
Yep.
And then something else happens and it goes up and then it plateaus. But never do you ever see it spike down.
Right.
I've never seen that historically.
Right.
So real estate, buying a home is still...
It's the American dream.
It's the American dream, and probably the like you said, the biggest investment and the best investment that you can make.
Exactly.
Yeah.
Exactly.
Cool.
I know.
Yeah, we're learning a lot of shit.
I know. I before we cut this off, thank you for taking on this podcast.
Yeah, dude.
Yeah. Man, I enjoyed it.
It's been fun.
Anytime, man. I can come in here and talk about it all day.
I'm going to ask you to cameo, if you don't mind,
Yeah.
a few times. That way we can talk more.
Sure.
more
If you need
bro.
me to chime in for any reason, and I'll be more than happy.
Yeah, this has been fun, bro. I feel like we could just keep going.
There's three things, right, in the construction industry, right? There's the guy that's manufacturing it, which is us, the builder. There's a guy that's selling it, which was here just a little bit ago, and then there's a guy that's going to provide the money to help people to buy it. And so those conversations got to be constant, and we got to continually be talking about it because things change, right? They just passed a bill that affects our buyers,
Right.
Yeah. So
exactly. And I'm glad you brought it up. And like you said, we always have to be communicating, sharing information with each other. It's not just one of those things where you focus on yourself and with blinds and what you're doing. And you have to know what's going on, and that just makes you a better professional in your trade. If you know about what I do and how it works, and I know what you do and how it works, it just makes us that much more valuable to our clients. And so,
why make it harder on yourself and trying to figure it out by yourself, right? Why not just join a team?
Exactly.
And so STBA, baby.
There you go.
Man,
that's a good finish.
Yeah.
That's the plug.
All right,
Bro, thanks so much
you.
for coming, man. This is very informative. We got to do
Very
this
informative.
again.
Thank you.
Appreciate you.
Mr. Mortgage, everybody.
Yes, sir.
You can find him on Trenton.
Yeah.
Next to Miss.
And
next to Jaime.
don't forget about his dream with the bow tie without any clothes. That'll get you at least one deal, bro. You owe me.
Either that or I'll lose a couple.
Oops. Oh, that was cool, man.